US dollar is falling, stocks are rising, and gold is at fresh record highs as attention turns back to Federal Reserve monetary policy, which is overshadowing the recent escalation in US-China trade tensions. Federal Reserve Chair Jerome Powell yesterday highlighted how the weakening of the US labor market rather than inflationary risks, and in the biggest hint yet that the central bank is ready to cut interest rates again in October. Now, Powell noted that even without the latest Bureau of Labor statistics due to that ongoing US government shutdown, privately produced measures of the jobs market, along with internal Fed research, provided sufficient evidence to indicate that the jobs market was cooling. Let's not forget that ADP private payrolls report came in down 32,000 in September. The comments suggest that Powell is shifting to a more dovish stance on monetary policy, even as worries about Trump's tariff policy will spur inflation. However, Powell also said on Tuesday that the longer-term inflation expectations remained aligned with the Fed's 2% target. The market is now convinced that the Fed will be bringing back-to-back rate cuts with a 25 basis point rate reduction in October and another in December. Now, as well as opening the door to further rate cuts, Powell also said that the Fed was nearing a point where it would stop selling its bond holdings in the so-called quantitative tightening program. Now, this would mark an important shift necessary to preserve liquidity in overnight funding markets. The Fed has been winding down the central bank's balance sheet since 2022, reversing trillions of dollars of asset purchases designed to stimulate the economy during the pandemic. Earlier this year, the Fed slowed the pace by reducing the amount of bond holdings it let roll off every month. Now, the Fed's plan is of a deliberately cautious approach to avoid the taper tantrums of 2019. Now, following Powell's speech, the US dollar is falling back to 98.50 versus a basket of major peers, helping US dollar crosses such as the euro US dollar rebound after recent weakness. US stocks are also extending their recovery after falling to 2-month lows at the start of this week, and gold has risen to yet another record high. The weaker US dollar, the prospect of a lower rate environment have boosted non-yielding gold above the $4,200 per ounce level. Momentum remains strong despite gold being technically overbought on multiple timeframes. For more videos like this, please do like and subscribe.